The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials down 17, NASDAQ up 46, S&P's up 2, gold contract up 360, trading 19.09 an ounce. You get silver flat, $24.41 an ounce. Light sweet crude up 36 cents, $38.92 a barrel. Notes and bonds. You get the 10-year up 4.6, 30-year up 11. 10's trading at 138.24, 30 at 173.30, and both notes and bonds, folks. Bottom line, they saved themselves once again. We'll see whether they're just barely in the higher range, but it looks like they're going to go, man. That's the bottom line. King dollar down 181 ticks, still having a hard time holding price. We're at 92.865. The euro is at 118. The yen is at 104.59, and the British pound is at 130 to 1 U.S. dollar. Tom O'Brien, what's going on?
Good Tuesday morning. Exciting markets, man. Lots going on. Big in earnings going on out there. We got mergers going on out there, and it's an exciting market.
No doubt. The most wonderful time of the year.
That's right, man.
That's right. Let's get over to our man, Mr. Kevin Hinks at TD Ameritrade. Think or swim as we do every Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time. If you want to understand the option market, option strategies, futures, great program. We are in the most wonderful time of the year. What that means specifically is that the bottom line, our man, Mr. Kevin Hinks, and his team, they're always setting up trades, folks. But when we're in the middle of earnings season, okay, it has the most amount of equities, so you have the most amount of chances to set up whether you're a bull, whether you're a bear, when you're looking at different strategies. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy. There's week for earnings, and then there's weeks for earnings, where you get so many big names this week. It's fun, but I'm going to tell you guys something that is kind of an interesting situation setting up here. Follow me for a minute.
Yes.
If you have earnings coming out this week, remember that the Thinkorswim platform comes up with a market maker move that measures the one-day move in an underlying.
Yes.
And that is triggered when the front month implied volatility, or the front week expiration, goes higher than the second week. Okay?
Yes.
That's what triggers that market maker move. It shows you that there's some event coming up. But the problem is, it's not a problem, but it's an interesting situation. It's very unique. You've got election next week.
Right.
So the market maker moves are being in some stocks, even though you have earnings this week, no market maker move is showing up because next week's implied volatility is even higher for an event.
See that's
pretty cool.
This week's market maker move smaller or even non-existent. So it's been a unique situation where we have event followed by event week in options. So it's really a unique, almost once in every 4 years situation that we run into with some of these names. So interesting week of trading options for sure.
I was thinking, if this is the most wonderful time of the year, does that make Thursday the most wonderful day of the year when you get all of those tech stocks lined up all in one? It's quite a week for sure.
I'm looking at the board, Tommy. It's Apple, it's Amazon, it's Facebook. It's just one after another. One of those is a big day.
Yeah.
If you're trading three of those, that is overload. If you're
and you get GDP on Thursday as well, Kevin, right? Which could affect the market.
Absolutely. And GDP is going to be, let's face it, it's going to be a historic number. It's going to be a level that we've never seen before, coming off of last quarter's level that we never saw before. So,
yes,
the expectations are for right around 31%, 30.9. Now we know what our expectations are. We'll see what that number comes out. It's going to be, Tommy, Thursday's GDP is going to be a must see and go over with a fine-tooth comb data point for sure.
Kevin, I wanted to ask you, Tom, I got it up there and for the listeners as well, in terms of the VIX, right? 3250, of course, so much volatility priced into these equities. And you're talking about for two reasons, some of them earnings. And then, of course, the election volatility. They talk about the put-call ratio in here at a level the market hasn't seen in like 14 years. Is that something you look at all? Quite a number, man. They have here, I got the chart up, and Kevin, you can't see it, of course, but the black line, of course, is the put-call ratio, which is really spiking above where we were, even at the market depths in March. And then, of course, you have the VIX spiking as well. But the put-call ratio in this market at dramatic levels right here.
Well, the put-call ratio is something that you always look at. Absolutely. But it's a number that it's hard to figure out exactly what it means. Because let's say, for instance, if you're trading the SPX, the S&P 500, that put-call ratio is different than equities, right?
Sure.
Because that implied volatility in the SPX is driven by the puts. The normal range for the put-call ratio in an equity is probably 0.5 to 0.7. But in the SPX, it's much higher. It's kind of a different number, and you've got to, I can always make the case. Let's say a lot of puts are trading in a name, right, in an equity, let's say. But if you're buying stock with that, it's actually a bullish position if you're buying stock and buying put. So
that's why I asked the question,
man. What
man.
they're doing on the other side of that trade.
Pretty cool.
So my simple read of that information is always a little skewed because I know when I bought puts, if I would buy a bunch of puts, I was buying stock against them and making that into a position. So it's hard to for an options trader to figure out exactly what the information is. It shows more activity, though. That's what we.
That's great info, man. Thank you.
Right.
And folks, so what you're hearing here, this is what's so cool. And thank you, Kevin. Thank you, Tom. Because, TD Ameritrade, TFNN, we're all into education. But that education there is like the ultimate. There's in between the aspect of. Can you imagine how many option traders, Kevin, are not going to know what you just said about the aspect of just this week and next week, just on the implied move? I mean,
right.
That's out there. That's the bottom line. And then, of course, what you just talked about with the SPX. And what I've found, and that's what's so cool about what you said, Kevin, when they don't mean that much, it means a lot, knowing that they don't mean that much. You know what I'm saying?
Yeah.
It's like, okay, man.
Everything is subjective, Tom.
Yeah. It's pretty wild.
Some of these implied volatility numbers, Kevin, and it speaks to both of the, Amazon has $213 for the week priced into this equity. $213. Pretty amazing. So,
and that shows you, Tommy, that the numbers are a little skewed. Because look at the week and then look at the day. They're not adding up right. And now we know why.
You got to love it.
So much volatility.
Folks, 45 minutes from now, Kevin, you have a great one, safe one. We look forward to the program.
Thanks for having me on, guys.
Thank you.
Thanks, Kevin.
Stay right there. Tommy and I come right back, folks.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's down 64. You got the Nasdaq up 32. S&Ps are off 2.5. And that was some nice information, Tom, huh?
You know, I'm glad you almost came back to it because I was going to say the same thing. I had read that article and even just, we only have a limited time with Kevin. I wanted to get his feedback on it. And,
Yes.
So you jump through it pretty quickly. But pretty remarkable numbers, man, when you put it on a graph. And they're talking about the put-call ratio, the highest level it's seen in 14 years. You see the spike we've gone just from September to October, right? And Kevin talked about, what do you say, 0.5, right, 0.6, 0.7?
0.5 to 7, right.
And that is where that black line, the put-call ratio, was before this started. We were sitting at about 0.6. We're sitting at 1.8. But I hadn't allowed my mind to just process some of those variables, right? And even over the commercial break, which is why I was going to talk back on, I said, what if one of the things people are doing, which is what people are doing, how big of a factor it is, that's what you have to have your bias of, right?
Right.
Is, you sell some cash secured puts, man. You want to get into some equities.
Right.
Maybe you sell some cash secured puts. The market dips. There you go. Well, what does that do, right? Well, that puts a little bit of a floor on how far the market could go down,
it does.
right?
It does.
That's if they're cash secured puts, 5% or even 10% below the market, that's where the market is,
It's
and that's
pretty
not
cool.
that.
I know.
Yeah, it is pretty cool. It's just one thing to
Because
process.
you can see that the gains that we've had, I think people are getting a better understanding, of COVID, what it's doing to us in the future.
Sure.
And then you get equities that you like and say, okay, if you get that equity 20% on sale, it's like, okay, man, put it in.
Yeah.
If you get hit, you got to score. If
you're a long-term buyer, right, and you get some kind of extreme volatility to the downside on some of these equities, which is what you're getting, man.
Right.
I talk about Disney a lot. You were just almost at 129. You were below 123 yesterday. $6 of volatility just from Friday to yesterday. That's an overreaction one way or the other, right?
Oh, there's no doubt.
Which way you're going to be. Some of the equities, continuing. I mean, even Zoom shares is trading $15 every 15 minutes, to be up there. And then the likes of course, Apple. Look at the volatility in a similar way. 116 down to 113 yesterday. You close at 115. So yeah.
Yeah. Hey, let me. This is pretty wild, folks. Okay, so I was shopping Saturday, right? And
Okay.
I was really in shock that I went down to the paper aisle, right? And the whole paper aisle was almost out again. I'm saying to myself, what the heck is this, man? Do you know what I mean? We're talking about paper towels, toilet paper, all of this stuff, and it was like, wow, man, why is this starting again? Now, there's an article out here today. Listen, I got to find this article because this is amazing. And here it is right here. So it's almost like, like the option market, folks can turn around and get things close to.
I'm sorry. I think we need your chart, too. We don't have it yet,
sorry. Here. The option market can get very close to where equities want to trade. I get a feeling the shopping market, okay, put together, is way ahead of the market in the context of where COVID is almost going. Because this was Saturday, right? And now this article out here today, listen to this. This is like insane. That American consumers who worked their way through the trove of shelf-stable meals that they frantically bought back in March are at it again. Okay? So this is right across the country. And I think what's happening here, they've seen what's going on in Europe, right? And they're saying, okay, I got to stock up again. I mean, this is insane.
And maybe what's going on here. I mean, we're fortunate that the wave hasn't.
It is going on. That's what this article's about. Right. Listen to this. This is like crazy. That all these big companies, General Mills, Campbell's, Conagra Brands, Stony Farms, okay, they're not only ready for it this time, they're pushing it out in a monster way. So it's really intriguing, man. It's like, okay, because at the first get-go, folks, I mean, none of us really realized that, what the ramifications of how long this was going to be. It'd blow my mind if all of us collectively, we just go to the grocers and you can find out how tough things are going to be 2 or 3 months from now. That'd be a freaking bummer. You know what I mean? It's like, okay, this almost looks real. You know what I mean? It's like,
okay. It is a real-world indicator.
This is food. Yeah,
people's spending habits and their frame of mind, maybe, you know, in terms of how that's, no matter what is being said out there in the politics, media about the virus, when push comes to shove, people realize there's a huge wave of the virus, they go out and they go shopping. You know?
Exactly. Yeah. Market-wise, again, bottom line is that we saw
What's happening?
What's going on? This is the differential. We've been talking about this. The differential is that, when the markets were going up, you'd see the markets go down overnight. Bottom line, they'd run them up. This has been a whole different market here the last 2 or 3 weeks, man. The bottom line is that, the trading gods have run them up overnight. Give the bears a chance to shot it again, and you can see it's giving it up again, man. You get the Dow down 143, the NASDAQ up 2, S&P's off 10, and, news-wise, the bottom line is that now the rhetoric is over. Because the administration did come out this morning on Fox and said, hey, listen, maybe we'll get a deal in the next few weeks. So that's it.
The Senate's not in session right now. They're not coming back in the next 6 days prior to the election. So.
Exactly. So, the market's taken a bit to digest this, but the bottom line is that, if you're looking for stimulus, folks, you're not going to be getting it for at least a couple weeks. And
so many dynamics, man, to see what happens 7 days from today on Election Day and see how that shapes where the negotiations go for that, until the inauguration of whether it's President Trump or President Biden.
Yeah,
in January.
Yeah, I think we're going to be talking about this in next March probably. But if that's the case, you're going to have so many companies go BK, folks. Okay, it's
a long time.
The underlying deal here is that things have not been that bad, but that's because of the amount of stimulus that's going in, and it's not hitting you and I because we're really not in the commercial real estate market's going to be the first one that goes south, meaning the amount of bonds that collect 1 penny on the dollar. And they're big numbers, man. Did I send you that article this morning? I'm trying to look.
I didn't get a chance to read it, but I did see it come in.
It's like in New York, folks, it's like 26% of the commercial-backed mortgages are in arrears right now. 26%. That's like insanity. But it makes sense because
I was just going to say where my mind almost goes is how is 74% not in arrears in corporate buildings right now, as in that's how bad it is, right?
Yes. Right. And, what that is that most public companies, folks, what they do, which is a shame, is that they don't keep a lot of cash on hand. They're going to pay the dividend. They're going to buy the stock back so the executives can make as much as they can. The ones that are going to stay in business are the ones that basically, just like anything else, they haven't over-leveraged themselves. They're not basically going from quarter to quarter. They're saying, okay,
Sure.
Do I have enough money for a year, year and a half, 2 years? That's what you should have. That's the bottom line. No one knows what's ever going to happen. So,
Right.
Dow Industrial's down $1.47. Nasdaq's up 13. S&Ps are off 9. Stay right there, folks. Tommy and I come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's down 124. You get the Nasdaq up 15. S&Ps are off 7.5. Some of the higher volume equities out here. Let's take a look at them out here. We got, Advanced Micro's taking over Xilinx. That's down 322. Now, you talk about a nice deal there, Tom. That is an all-stock deal. How's that?
Yeah.
So, I mean, watch this, folks. If you want to see how currency can really... basically, when you don't have to spend your cash, it's pretty amazing. So if I take this back 2 years, You're going to see 2 years ago, AMD was trading at oh my God, it's $17. It's at 79, folks, and guess what? How would you like it that you peel off your own currency, your stock, and then you buy XLNX, just so you can see what you're buying. Now look at this. This is pretty cool, man. And Xilinx is up $10. You're buying $3.2 billion in revenue.
Yeah.
How's that, huh?
Huge, yeah. And look at the growth numbers all across the board in those segments they have down there.
It is. Big numbers.
Yeah.
Oh, yeah, let's go to Las Vegas Sands. I heard you talking about that. This is pretty wild, how the difference in revenue, man. So,
it sure is, man. And I got to find that chart. Remember that chart we had at one point in terms of the Macau revenue for gaming operations only versus Las Vegas, talking about its entirety, right? The entirety of Macau gambling revenue versus the entirety of Las Vegas.
Yeah.
Las Vegas is a sliver, folks, more than you can imagine compared to the amount of gaming revenue that comes from those Asian hubs. But yeah, pretty remarkable when you look at there. So Las Vegas Sands, they're thinking about selling their Vegas properties, the Venetian, Palazzo, the conference space there. And you see $2 billion of almost $14 billion of revenue, and it's a declining revenue that they have up there as well.
It's nothing. It's like, why would you want it when you can, you're growing at 9% in Macau, right? What's amazing, too, is that just Singapore, folks, is a city-state. Singapore is tiny. That's what's so crazy. Do you know what I mean? Look at that number.
Yes.
$3.1 billion. Now, granted, okay, they're near huge amounts of money that evidently fly in, okay, because I don't think that's coming just out of Singapore.
Sure, right.
It's
a hub. Exactly, it's a hub.
One monster number, man.
You get those Asian whales, man.
Oh yeah.
Gambling at those Macau tables, or maybe baccarat, or
if you've never seen it, folks, some of the most fun I've ever had is just standing outside of, those tables, and I forget the name of that card game that they play. It's just like one or two cards. It's like, oh my God, they're like buying and selling apartment buildings like in every minute. It's like, oh.
Sure.
And that's not even the private rooms, because the room that I was watching at, and I think it was one of Wynn's deals. You could walk outside, and that's not even the ones. I mean, I think the guys that whether it's 10 million, 20 million, they're in private rooms, but it's pretty wild watching how there's almost no emotion.
Right.
Yeah.
Right.
Crazy.
Yeah. Just to add, I wonder how. So, of course, I played a decent amount of online poker in my history. Sheldon Adelson always been hugely against that idea, protecting his brick and mortar casinos, of course, from online expansion. I think that's almost even a mistake, because now they're getting out of the entire U.S. market. But these casinos, you're seeing it in MGM, right? In Harrah's, they have online operations going in Vegas, Nevada, in New Jersey, some of those expansions going on. You see the likes of DraftKings and stuff like that. If you have a brand and you can really expand, like Penn Gaming, they got Barstool, but nonetheless, he'll be out of the U.S. market, so he's not going to have a horse in the race anymore. And so I wonder if that would allow, because he has been a huge donator and proponent against online gaming in any way.
So there's a new person that is not going to be against it. Yeah, interesting.
That's what I'm saying, exactly. Yeah. He's been the biggest one against it, with donating millions to squash it, which is remarkable when he runs, one of the biggest gaming hubs in the world. So
welcome to capitalism.
Exactly.
So inside the NDX 100, folks, the strength versus the weakness out here. We get Xilinx as the strength. That's up 9.5%. Look at this. Line is up again. Look at this, man. We got to look at this. This. I know it was an ABC up, but this is like crazy, man. This is. Just look at this. Okay, so it gapped up on last Tuesday. It was at 328. It gapped up to 458. We're at 466 now. Man. They're selling some product, evidently. Taken away from it, you get Dexcom's down 5.5%, AMD 2.8, Intel 2.3, and Moderna 1.7. Let's go to Intel. So Intel, bottom line, look at this, man. I think this has a high volume low, too. Yeah, there it is. It's going after it. Is that the March low? Look at that. So this is going to be intriguing, folks. Imagine that brand-wise, technology-wise, that Intel, if I ever thought that Intel was going to be one of the first ones to reach their March low, it's like, what?
Right.
That's where it's going. You know,
they get some big problems over at Intel, man.
Yeah, look at this. We're only 2 points away from the March low. That is saying quite a bit. In fact, if I put this on a monthly, that's going to be that's.
Oh yeah.
We'll see.
I mean, what happened? Their business was already crumbling, COVID aside. You know, as in not being able to compete with AMD, and that's kind of what they came out with. I mean, it's pretty astonishing, really, to just like in that last earnings 3 months ago. So it's It
is. It's pretty amazing.
Hey, how about Shopify? Can we take a look? They get their earnings Thursday as well, as if we don't have enough earnings going on Thursday. Shopify on there as well. They announced today, let me pull the article up. They're doing a deal with TikTok. They're partnering to help its 1 million plus merchants more easily advertise their products on the video sharing app. The partnership will allow its merchants to sell product in the form of shoppable video ads, where TikTok users can click on an ad to buy the product. We use Shopify. Let's get our TikTok ads ready. We'll get them going, man.
I'm telling you, that's picture this. They're going after the youngest demographic. That
growth. Why not, right?
And what happens here? So check this out. That's not only the youngest demographic. That demographic right there doesn't even know the world without technology.
Yeah.
You know, and like any TikTok person probably that's using that, I bet if we went on some of their pages, you could see their whole life. Their mothers probably have pictures on them when they're 2 years old. They're only, 12 to 15 now?
Sure.
Do you know what I mean? It's
without a doubt. You're exactly right, man, because you're talking about, 2020. I mean, I wonder what the average age of a TikTok user is. Teens, I'm guessing,
yes,
of some degree.
Right,
so that means you're born after the year 2000, and it was Facebook coming out just in the early 2000s.
Yeah.
So there you go.
Pretty wild, right?
It is pretty wild, man. But
hey,
Shopify.
So let me ask you something. What's the story with Apple's new iPhone? Are you getting one? I
do plan on getting one, and we have T-Mobile Sprint, right? So all the carriers this go around. And I got my iPhone 8, I believe.
Okay.
And we'll talk about it after the break.
Yeah,
but if you have a previous iPhone, folks, check it out with your current carrier, because there are some pretty good deals this go-around of trading in your iPhone, getting like a $600, $500 credit. They give you that credit over a period of time to try and keep you as a subscriber on their network.
Okay, cool. Yeah. Stay right there, folks. Tom and I come right back. Dow down 86, NASDAQ up 43, S&P's off 2.5. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com. educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow right now down 117, Nasdaq's up 31, S&Ps are off 7.5. So let's talk about this Apple phone, Tom. So what do you like about it? Other than you probably need
number
a new phone,
one, it's 5G.
Okay.
So you're kind of prepared for the future. You'll be able to at least capitalize on those technology advances, right? I mean,
Right.
I've got an iPhone 8. It's a great phone. The home button actually has got a problem that makes a lot of noise. It's a little broken. That needs a little fix. The battery is not as good as it used to be.
Yep.
So it's probably time for an upgrade.
Just about
especially
time, too. I mean,
yeah,
I know.
I think it's 3 years old, something like that. It works if needed, but it needs a repair right now anyway because it just makes a lot of noise with the home button. But the subsidies that the carriers are providing, really interesting. This article out here from CNBC and many of them. So this was October 17th, 10 days ago after they came out with the phone. The whole industry with this super cycle of phones as 5G comes online, so people are going to have to make sure they have the 5G. It's an opportunity for these carriers to provide subsidies, and they're almost going back to the days of almost a full phone, as long as you sign up for 2 or 2.5 years, whether it's 30 months. So AT&T, and of course the biggest promotions are if you're joining a new company, right?
Okay.
They got promotions to the tune of almost $400 to $500. I'll go for current customers. But the biggest ones, of course, is if you change, you go to a new one. I mean, AT&T, you're talking about almost $800 in subsidies that they're getting. To get a free iPhone 12, they require a trade-in, activated on an unlimited plan of $65 per month for 2.5 years. I mean, a lot of us are paying $60 a month on an ongoing basis, right? So if you are, not the end of the world, you basically get that phone paid for over 2.5 years of staying with the company. T-Mobile's giving you as much as $850. They're spreading it over 2.5 years as well. If you're a current customer, a little bit of a lesser deal. I pulled up the T-Mobile just because I was curious.
Because
it
that's
does
us
matter,
now, right? Because T-Mobile took over Sprint.
That's us, yes. No longer Sprint, right? T-Mobile. So if you're trading in an iPhone 11 or an XS Max, they'll give you $500. An iPhone 8, $415, and they go down the line for previous models. But not a bad deal. In years past, we got nothing. For upgrading your phone. This time they'll give you $415 in credits, and then that is as long as I believe you're staying there.
They're going to sell a lot of phones then, man. Yeah.
They sure are. I mean, this is how Apple changed the world, man. They could not have changed the world if they came out and consumers had to buy those phones at the prices that they were getting.
Right.
The brilliance of working with the carriers, realizing that the carriers would use the phones. Don't pay make the consumers pay for the phone. It's too much of an upfront cost.
Yeah.
What do Americans love? Credit, man. Future payments, and that's how they managed to get them to do it. And it looks like they're going back to a similar model, but not a bad deal for consumers.
No. Can you imagine that when the carriers can do that the spread or their overhead costs to basically get us to talk to each other must be minimal once everything is built out. You know what I mean? Because if you do the math there, you're at approximately 20. The first one he gave me, which is the $65, right? You're
yes.
At, you like at $2,200 for 3 years, right? Let's say the phone cost them, even if it was $1,000, maybe they get it for $600. You can see that the bottom line is that long-term contracts, not only where it's at, but you can see that their cost of doing business must be very minimal. I mean, because I think Ma Bell, like in a quarter, here, let me go look at it, because it's an outrageous number. That the reason this is coming up, folks, is that Ma Bell's thinking of getting rid of AT&T, CNN, and these other properties.
Okay.
Yeah, so they do $170 billion a year. Oh my God,
Quite the company.
yeah. And Warner Media, see, that's the one. Warner Media does $33 billion, but yet the communications does $142. So you can see, it's a huge number. Look at this.
Yeah.
This interesting. Europe is growing on a 3-year basis, 76%. Wow, that's.
Yeah, it might. I'm not sure what segment, right? $6 billion out of 180 billion.
Yeah.
But it should be interesting, man. And Apple, I mean, they're the strongest company out there, man. I mean, they got so much money in cash. They're ingrained in society in a big way, and the recurring revenue's going well for that company. And you're gonna have the whole cycle of people being able to trade in with some rebates for the first time in a while.
Yeah, pretty wild.
Yeah.
That's gonna, and so Apple comes out. Now, are they selling these right now? So they are selling them right now, right?
Yes, they are.
So
You're
Apple,
selling them right now.
So Apple's coming out with the numbers Thursday after the market. So they'll have some preliminary numbers probably inside of those numbers that they're giving out.
They should probably. I mean, that'll be an interesting conference call at least, right? Even if those dollars and cents aren't really listed anywhere in the actual financials of the quarter,
right?
You know that the analysts are going to be expecting that Apple has an idea of how those sales are going already.
Yeah, no doubt. Yeah. Amazon. So Amazon's up $40. No big deal there. Let's go over to Google and see what that's doing. Google's flat, up $4, flat. Facebook's coming out with their numbers on the 29th also. That's up
Same deal.
$4.90.
Facebook, Google, Apple, Amazon. It's like, wow. Yeah.
That is...
It is, man.
Holy cow.
On the same day that you get a historic GDP reading,
right,
going into the Friday before a presidential election. I mean, there really is nothing like Thursday in terms of maybe when you get it once every 4 years on the biggest earnings day around election. But you don't get it usually with so much volatility during a pandemic that the volatility around the earnings is more than you'd even expect going into that type of event.
No doubt. Let's go over and take a look at the NQs. So the NQs just popped basically almost 75 points in 15 minutes here. Not over the high of this morning yet. The high that we had out here at 9:40 got to 11,578. You're at 11,571 right now. You spread down to, look at that. Yeah, so we just moved 90 points in 30 minutes. We'll see whether they can overtake it. It's going to be tough to overtake this number, folks, because we had volume up there of 23,000 contracts. The last 10-minute bar only had 13,000, and this one will have more, but I don't think it's going to hit the 23. But more than likely, what you'll see, it won't hit it. Let me see. Yeah, it's not going to hit it on this 10-minute bar. So now it will have a shot at it, because what I've seen is this. When you're dealing with any type of bar, but I'm dealing with a 10-minute, if you stop right before it and the volume does expand, and then you get a fresh bar, the bottom line is that it's going to have a full 10 minutes to make the approach, to see whether it can basically blow that away. Now, that being said, what the NQs have actually done, and this is like a classic, this is a Wyckoff classic, folks, okay? This bounce that we had only came up to ICE. ICE on the NQs is 11,533. 11,000, yeah. So we're barely over it. Is it that bar right there? It's that bar right there, the top of that bar. No, it's 11,571. That's ICE. And what ICE means, in Wyckoff terms, is that you have a downdraft, and then you get a large bar, and you're breaking the consolidation it was in. You can see going back there, bottom line, that's where ICE set up. So it's pretty wild that we did that bounce up to ICE. Now the question is going to be, who's going to win, the Bulls or the Bears? Stay right there, folks. Tommy and I come right back.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now down 92. You get the Nasdaq up 59. The S&P's down 3.5. And bottom line, we'll see how this can hold these levels. And yes, home sales. So look at this, right?
How about these numbers, man? Rise in August, biggest gains in more than 2 years. 20-city composite rose 5.2% year over year, up from 4.1% in July. All 19 cities rose monthly and annually. It's been the case, but just continues to be the case in that home market, as you know.
There's no doubt. And what you have here, folks, inside of this is that there's plenty of people that the bottom line is that they don't want to move, period. You know what I mean?
Yeah, you can't. And the big Wall Street firms that own the tons of them, they don't need to sell them to securitize and monetize and do all that stuff and retain ownership. So where's the supply come from? Builders are doing really well, of course, but yeah.
You know, what they've always said, folks, in the real estate market, there's only so much land. The bottom line, in the United States of America, we have so much land, it's amazing. What we don't have is so much land where people want to live.
Very well said.
That's where this thing comes down. And as Tommy just said, the institutions that are coming in, buying, they're never going to sell. And I personally have business with them, and I know that. You know, they're never going to sell, ever.
And it just makes sense. If you're in that type of a financial power, even if you were just a single person like yourself or myself, right? And you had the financial wherewithal to have hundreds of millions of dollars of land in areas where people like to rent it too, which is the key part, right?
It is the key part.
There you go.
It is the key part. And guess what? Stay right there, folks. We got Think of Swim coming up next. And, of course, I'm Mr. Kevin Hinks. Him and Tommy gave a great education, you know, in this 15-minute clip when he was on. Really important, folks.
You think they're going to have enough to talk about next hour?
I think it's so cool, man. I love those light bulbs when they go off.
Seriously.
Then we get our man, Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Oh, yeah.